Tesla, just hearing the name evokes strong emotions, right? Love them or hate them, there's no denying Elon Musk and his electric car company know how to make headlines. Lately though, the news hasn't been so rosy for Tesla investors. The stock has taken a tumble, leaving many wondering, is this a buying opportunity or the start of a downward spiral? Like a Tesla on autopilot, the stock market can be unpredictable. Sharp turns and sudden stops are part of the ride, but for savvy investors, these fluctuations can present opportunities. The key is to cut through the noise and make informed decisions based on facts, not emotions. So, what's the deal with Tesla? Why is the stock down? And should you be hitting the buy button or running for the hills? Let's break it down. Remember all that hype about Tesla's Robotaxis? Yeah, about that. The long-awaited Robotaxi event came and went, and let's just say it didn't exactly set the world on fire. Don't get me wrong, the technology is impressive, but it's clear that fully autonomous robotaxis are still a long way off. Investors, who often get ahead of themselves, sound familiar. We're hoping for a more concrete timeline and a clearer path to profitability. When those expectations weren't met, the stock took a hit. It's a classic case of buy the rumor, sell the news. But here's the thing, Tesla has always been about the long game. Elon Musk is known for his ambitious vision and his tendency to overpromise and underdeliver, in the short term at least. So, while the Robotaxi event may have disappointed some investors, it's important to keep things in perspective. The Robotaxi disappointment was like a spark that ignited a fire. A confluence of factors has been weighing on Tesla, creating a perfect storm for a sell-off. First, there's the issue of competition. Tesla is no longer the only game in town. Traditional automakers are finally getting serious about EVs. Second, macroeconomic concerns are also playing a role. Inflation is high, interest rates are rising, and there's fear of a recession. Investors are pulling back from riskier assets like growth stocks, including Tesla. Finally, there's the Elon Musk factor. Elon is a polarizing figure. His antics on Twitter and his recent acquisition of Twitter have some investors questioning his focus. Okay, so the stock is down, but is it a buying opportunity? That's the million-dollar question, isn't it? The answer, as with most things in the market, is it depends. On the one hand, Tesla is still Tesla. They're the pioneers of the EV market. They have a powerful brand, and they're led by a visionary, if sometimes erratic, CEO. Tesla also has a strong track record of innovation and execution. They've consistently delivered on their production goals, and they're expanding their manufacturing capacity globally. Moreover, the long-term growth story for electric vehicles remains intact. The transition to sustainable transportation is inevitable, and Tesla is well positioned to capitalize on this trend. They have a first-mover advantage, a loyal customer base, and a growing global charging network. So, there's a strong case to be made that Tesla's stock is oversold and that the recent dip presents a buying opportunity for long-term investors. But before you go all in, let's look at the risks. What do the experts on Wall Street think? Well, as usual, they're divided. Some analysts remain bullish on Tesla, citing the company's strong fundamentals, growth potential, and Elon Musk's track record of defying expectations. They argue that the recent sell-off is overblown and that the stock is poised for a rebound. Other analysts are more cautious. They point to the increasing competition, the uncertain economic outlook, and the potential distractions from Elon Musk's other ventures. They also worry about Tesla's reliance on regulatory credits and the potential impact of a price war in the EV market. As you can see, there's no clear consensus among the experts, and that's okay. It's important to remember that analysts are just people with opinions, and those opinions can be wrong. Investing in Tesla is not for the faint of heart. It's a volatile stock with a high risk-reward profile. Do your own research and understand the risks. Key risks include competition, execution challenges, and economic slowdowns. Tesla faces increasing competition and must execute ambitious growth plans. They need to ramp up production and innovate. Economic slowdowns could hurt demand. Elon Musk's unpredictable behavior could be a distraction. Potential rewards include market leadership and brand recognition. Tesla is the clear leader in the EV market. They have a powerful brand synonymous with innovation. Tesla is at the forefront of EV technology. The global EV market is growing and Tesla is well positioned. So there you have it. Tesla's stock is down, but is it a buying opportunity? The answer, my friend, is up to you. For me, I am buying and adding as we get dips. There are valid arguments to be made on both sides. If you believe in the long-term growth story for electric vehicles, if you're impressed by Tesla's technology and brand, and if you're comfortable with Elon Musk's leadership style and the risks involved, then buying Tesla at its current price could be a smart move. But if you're worried about the competition, the economic outlook, or Elon Musk's unpredictable nature, then it might be best to stay on the sidelines for now. Remember, there are plenty of other fish in the sea, and you don't need to swing at every pitch. The bottom line is this: do your own research, understand the risks and rewards, and make an informed decision that aligns with your investment goals and risk tolerance. And, hey, maybe buy a Tesla while you're at it. What are your thoughts on Tesla's recent sell-off? Do you see it as a buying opportunity? Let us know in the comments below. Don't forget to subscribe for more in-depth market analysis videos.